Today, something changed in the US stock market quietly, subtly, and almost unnoticeably for anyone who isn't paying attention to the deeper layers of Wall Street activity. It wasn't a headline event, it wasn't a sudden sell-off, and it wasn't even a dramatic price move. But beneath the surface, the market began forming a shift that could play a major role in how stocks behave this week. Let's break down exactly what happened and why this moment matters more than most traders realize. The first major clue showed up in institutional futures positioning. Large traders adjusted their contracts in a way that suggests they no longer want to maintain the same level of exposure they've been holding over the last several sessions. This wasn't a panic move. It was measured, strategic, and precise, exactly the kind of repositioning that appears when institutions anticipate a significant catalyst. Next came the changes in volatility. The volatility index, often ignored during quiet sessions, began rising in controlled increments. This is one of the most important signs of an upcoming market shift. When volatility increases slowly rather than sharply, it indicates that large traders are preparing for an event before it happens. They're not reacting, they're positioning. At the same time, market breadth weakened. Even though the major indices looked stable, fewer stocks participated in the movement. Breadth is like the heartbeat of the market. When breadth drops while the indices stay flat or rise, it means the market's strength is artificially supported by only a few names, often large-cap leaders. This narrowing of participation happens before both breakouts and breakdowns, making it one of the most important indicators of a shift. Another powerful signal came from options flow. Institutional options activity revealed a surge in hedging, particularly in large clusters of protective puts. Instead of betting aggressively on upside, big traders chose to guard against downside risk. When institutions begin hedging at this scale, it means they're expecting volatility, uncertainty, or a potential surprise ahead. Now let's talk about sector behavior. Several defensive sectors quietly outperformed today while risk-on sectors hesitated. Utilities, healthcare, and consumer staples saw accumulation, while discretionary and technology names experienced intraday selling pressure. This type of early-stage rotation is a classic sign of preparation, not panic, but preparation for a change in market conditions. Another piece of the puzzle arrived from the bond market. Bond yields shifted in a pattern that generally appears before economic updates or Federal Reserve commentary. A sudden spike followed by a fast retracement hinted at uncertainty and expectations. When the bond market moves without direct news, it usually means traders expect something to materialize soon. But one of the most important clues today came from liquidity. Liquidity thinned during key trading windows, particularly the open and close. When liquidity disappears, markets become more sensitive to smaller orders. This environment often precedes larger moves because traders step aside to avoid being caught off guard. Then came the institutional order flow at the end of the session. A mix of sell programs hit risk assets while selective buying supported defensive names. This is a signature pattern that often appears when institutions rebalance their exposure ahead of known or unknown events. All these signals point to one conclusion: the market is preparing for a shift. Not necessarily a drop, not necessarily a rally, but a directional change driven by catalysts that traders may not fully understand yet. When volatility rises, breadth weakens, hedging increases, defensive sectors strengthen, and liquidity tightens. The market is signaling that something important is forming behind the scenes, and those who ignore these quiet signals usually end up reacting too late. The takeaway for traders is clear. This week matters more than it seems. The market is setting up for movement, and the most successful traders will be the ones who recognize the shift before it becomes obvious. If you want daily coverage on these hidden signals and real Wall Street movements, subscribe to Wall Street Market Brief every day. We break down exactly what's happening beyond the headlines so you can stay ahead of the next major move.